Hi everyone, my name is Kaleboga Bikobosemeta. We are going to cover economic moat, what it is, its importance, and then we're gonna give real life examples. And lastly, how the company's moat can impact its long-term profitability and stock valuation. So, what are economic moats? Economic moats are simply what competitive advantages that protect the company from rivals, helping it to maintain profitability and market share over time. The term popularized by investor Warren Buffett refers to the idea of moat surrounding a castle, keeping competitors at bay. There are a few key reasons why economic moat is important. Sustain profitability. Companies with economic moat can maintain higher profit margins as they face competition and can fend off price wars. Reduce the competition. A robust moat can deter new entrants, making it difficult for competitors to gain market share. Customer loyalty. Brands with moats often enjoy strong customer loyalty, leading to repeat business and stable revenue streams. Pricing power. Companies with significant moats can often set prices above the market rate, further enhancing profitability. Long-term stability. Economic moats contribute to companies' resilience during economic downturns, providing a buffer against market volatility. And lastly, attractive to investors. Firms with strong economic moats tend to be more attractive to investors as they promise steady growth and returns over the long term. In summary, economic moats are vital for ensuring a business longevity and success in a competitive market.
Good day, my name is Sane Podile and I'll be taking you through the different types of economic moats and their qualities. The first type of moat that we have is known as a secret moat. A secret moat refers to competitive advantages that are not observable or understood by the general public or competitors. These competitive advantages include trade secrets, specialized skills, and unique processing methods. Examples of local firms having secret moats include Debsona Diamond Company. Their partnership with the government gives them exclusive mining rights and access to Botswana Diamonds resources, and this gives them a significant advantage over potential competitors. Moving on to the qualities of secret economic moats. Lack of transparency, because when a company keeps its operations and strategies veiled, it creates an information asymmetry. Competitors struggle to understand the company's competitive advantage, making it difficult to replicate its success. Superior organizational skills. A well organized company can achieve operational excellence, reducing costs and increasing efficiency. Strong organizational skills also enable the company to adapt quickly to changing market conditions, giving it a competitive edge. Also, a positive and well-structured work environment can attract and retain top talent, further enhancing the company's capabilities. Regulatory limitations. There are barriers to entry. Regulatory hurdles can make it difficult for competitors to enter the market, protecting the company's market share. Under intellectual property, we have patents, trademarks, and copyrights that can protect innovative products and services, making them difficult for competitors to imitate. Moving on to brand moats. A brand moat simply refers to a competitive advantage a company has due to the strength and reputation of its brand. Qualities of brand moats. Business networks. Business networks come with enhanced distribution, increased visibility, and reduced costs. Partnerships with other businesses can elevate brand awareness and exposure, leading to greater recognition and customer trust. Loyal customers. Loyal customers provide a steady stream of revenue, reducing the need for constant customer acquisition efforts. Differentiation. Differentiation sets a company apart from competitors, making it harder for rivals to replicate its success. A differentiated brand can often command higher prices due to its perceived value. Brand reputation. A strong brand reputation builds trust with customers, making them more likely to choose the company's products or services. A strong brand reputation can also attract top talent, further enhancing the company's competitive edge.
Greetings, my name is Larna Mogomuzi and I'm one of the people who will be teaching you about different types of economic moats as well as providing real-world examples for each. We'll further be discussing how companies' moats can impact its long-term profitability and stock valuation. We'll now be looking into the discussion of how a company's moat can impact its long-term profitability and stock valuation. What you need to know and understand is that a company's economic moat significantly influences its long-term profitability and stock valuation. An economic moat, often likened to a protective barrier, allows a firm to maintain a competitive edge in its market, thereby safeguarding its profits over time. We'll now be looking into how moats contribute to profitability and valuation, which is the long-term profitability and stock valuation. Now looking into how moats contribute to long-term profitability, we'll start by looking into the sustained competitive advantage. Companies with strong economic moats can maintain their market share against competitors, resulting in consistent revenue streams. Let's take, for example, the Botswana Power Corporation, which is the BPC. It benefits from a regulatory moat, being the primary electricity supplier in Botswana. Its position allows for stable pricing and guaranteed customer demand, leading to predictable cash flows that enhance long-term profitability. The pricing power. Firms with economic moat often possesses the ability to set prices above competitors without losing customers. This is evident in Kalahari Breweries, which has established a strong brand presence in Botswana's beverage market. The company can command high prices for its products due to brand loyalty, thereby improving its profit margins. High pricing power translates into greater profitability over time, as seen in companies like Apple, which capitalizes on its brand moat to sell premium products. And thirdly, the cost leadership. Companies that achieve operational efficiencies can produce at lower cost than their competitors. Let's take, for example, the Safalana. The Safalana leverages its economies of scale in the retail market, allowing it to offer competitive prices while maintaining healthy profit margins. The cost advantage contributes significantly to Sefalana's long-term profitability, positioning it in Botswana's competitive retail landscape. Now we'll look at how moats contribute to the stock valuation. Into the stock valuation, we'll firstly look into perceived stability. Companies with robust economic moats are often viewed as safer investment, leading to higher valuations. Investors are willing to pay premium for shares of companies that can maintain profitability in the face of its
competition or competitors. For instance, let's take the First National Bank of Botswana, which is FNBB. It has a solid market position and solid financial performance, resulting in favorable perception among investors and high stock price relative to earnings. Secondly, we'll look at the growth potential. Economic moat can signal growth potential as they suggest that a company can sustain its competitive position. Firms like Choppies expanded regionally due to their strong operational framework and market presence. This expansion potential enhances investors' confidence and drives up stock valuations, as seen with companies that consistently post growth figures. Thirdly, we're going to take the market resilience. The company with economic moat can often be more resilient during economic downturns. For instance, let's take the Coca-Cola. While the Coca-Cola is not a Botswana-based company, but it illustrates how a strong brand moat allows it to weather economic storms better than less established brands. This resilience attracts investors looking for stable returns, further increasing the stock valuation. In summary, a company's economic moat is a critical factor in determining a long-term profitability and stock valuation. Firms like Botswana Power Corporation, Kalahari Breweries, and Sefalana instead illustrates how market moves create sustainable advantage that leads to consistent profitability and favorable investor perceptions. This dynamics are essential for companies aiming to thrive in competitive markets, ensuring that they can not only survive but also grow and enhance shareholder value over time. Thank you.